Assalamualaikum warahmatullahi wabarakatuh. To our respected lecturer, Dr. Shukriah, we are from Group 4 from AC220B5B. We'll be presenting question 1D, question 2 and question 4 of Group Project 1. My name is Dalili Adlina binti Aisham.
Assalamualaikum and hi everyone. My name is Nurfarah Hanis binti Ali.
Hi, my name is Nurul Fatihah binti Razlan.
My name is Sabreena binti Samyeer.
Hi, my name is Suraya Qistina binti
Without further ado, I will start our presentation by presenting the first part, which is the question 1D. This question has asked us to prepare the consolidated statement of changes in equity for the year ended 31 December 2021. As you can see on the table beside me, we will have 5 columns under our consolidated statement of changes in equity, which consists of ordinary share capital, preference share capital, group retained profit, non-controlling interest, and lastly, group asset revaluation reserve. I will start first by explaining the first column, which is the ordinary share capital. For the retained profit as at 1 January 2021, we will get the amount of 2,400 million ringgit under statement of changes in equity given in the question. Furthermore, on 1 January 2021, Great Berhad had acquired another 20% of ordinary share capital of Axel Berhad, that is by issuing 12 million new shares. The consideration transferred for this acquisition is 67.2 million ringgit. Since Great Berhad did not record this transaction yet, therefore, it will be credited to ordinary share. The journal entry for the second acquisition is debit investment under Axel Berhad, and it will be credited with ordinary share capital with the amount of 67.2 million ringgit for both. Hence, by calculating, the overall total under ordinary share capital is 2467.2 million ringgit. Next, we will move on to the second column, which is the preference share capital. Under this column, we will only need to put the amount of 300 million that is given in the question that is stated under Statement of Changes in Equity. Hence, the total for preference share is 300 million ringgit in total. Then, we will move on to another column that is for group retained profit. The calculation is quite different from the other two that I have explained earlier. I will be showing the calculation for this part. To calculate group retained profit at 1 January 2021, we must calculate all adjustments for the previous year. Post-retained profit of Great Berhad will be added with the post-retained profit of Big Berhad and Axel Berhad. Since Great Berhad was acquired during the year, it will not be included but will be recorded as acquisition during the year. In this question, there is no adjustment that is being made in the previous year. Therefore, to get post-retained profit as at 1 January 2021 will be deducted with pre-retained profit. After we calculated the post-retained profit amount, it then will be multiplied with the percentage of controlling. Let's take a look at the calculation for Big Berhad. Here, we get the amount of retained profit of 182.4 million ringgit, and then we will deduct it with pre-retained profit amounting to 100 million ringgit, which can be found under question under investment in Big Berhad. The same also goes for Axel Berhad. It will deduct 119.4 million ringgit with pre-retained profit of 170 million ringgit that can be found under investment in Axel Berhad in the question. After we get the answer, we will need to multiply it with percentage of controlling, and you will get the amount of 61.8 and 1.44 million ringgit respectively. The sum of them will become 602.34 million ringgit. After that, we need to add on the profit for the year amounting to 108.35 million ringgit. This amount is obtained under Consolidated Statement of Profit or Loss, whereby we will get this number after we deduct the profit after tax 152.12 with non-controlling interest for 3.77 million ringgit. As for dividend, we could see under Statement of Financial Position given in the question, Great Berhad has 6% preference share amounting to 300 million. Therefore, to obtain preference share dividend, we will need to divide that 300 million with 6% and we will get 18 million ringgit. As for the ordinary dividend, we will use 60 million ringgit obtained from Sochi in the question, and it will be subtracted with 80 million, and we will get 42 million ordinary share dividend. Hence, the total group retained profit will be amounting to 650.69 million ringgit. And that's all from me. I will pass the slide to next person, which is Sabreena.
Thank you, Farah, for the great explanation. Now, I'm Sabreena and I will continue to explain about the consolidated statement of changes in equity for the non-controlling interest and the group asset revaluation reserve. First, we will calculate the non-controlling interest on the 1st January 2021. For Big Berhad, we will get 575.1 million after adding the non-controlling interest on the date of acquisition, 314.5 million, with the preference shares 240 million, and the post-acquisition profit 20.6 million. For XL Berhad, the non-controlling interest at the time of acquisition, which is 196.8 million, will be added with the post-acquisition profit 0.96 million, giving us 197.76 million. Thus, the total for the non-controlling interest at the date of acquisition will be 772.86 million. Next, we will add profit for the year 43.77 million that we get from the consolidated statement of profit or loss. On the 31st December 2021, there is a revaluation of freehold land that resulting an increase of 700,000. This revaluation will increase the non-control interest by 0.28 million. There is also acquisition of Good Berhad during the year that increased the amount of non-control interest by 70.12 million. Besides, Good Berhad is a subsidiary of Great Berhad. Thus, we will minus the indirect consideration transferred amounted to 45 million. Then, we will decrease the value of non-controlling interest by 98.88 million because there is a changes in shareholding of XL Berhad. For column non-controlling interest, we will minus the dividend paid and proposed by the subsidiary and multiple with the percentage of non-controlling interest. For ordinary dividend, we will minus 3.9 million for Big Berhad, 1.2 million for XL Berhad, and 3 million for Good Berhad. For the preference share dividend, we will minus 14.4 million because Great Berhad didn't acquire any preference shares from Big Berhad. So, the total for the non-controlling interest will be 720.65 million. For the group asset revaluation reserve, the balance on the 1st January 2021, which is 510 million, will be added with the revaluation during the year amounted to 24.2 million. Therefore, the total for the group asset revaluation reserve will be 534.2 million. That is all from me. Now, I will pass to the next presenter to explain about the answer for question 2.
Thank you so much to the presenters question number 1D. Now let us move on to question number 2. So question number 2 stated that Nel Berhad and Shinji Berhad involved in the property development business acquired 50% shares respectively in F&E Berhad on 1st January 2022. Following the acquisition, Nel Berhad and Shinji Berhad appointed one F&E Berhad senior management team member. Senior management appointed by Nel Berhad has the right to make key decisions on an important project of the company and how the project is financed. Nel Berhad also has supervisory roles in monitoring the project undertaken and getting related approval from the board of directors. There is no contractual arrangement between Nel Berhad and Shinji Berhad to consult Shinji Berhad or make a collective decision. The question required our team as a group of accountants to discuss our opinion on Nel Berhad, Shinji Berhad and F&E Berhad with reference to the relevant MFRS, which are MFRS 10 and also MFRS 11. MFRS 10 consolidated financial statements outline the requirements in preparing and presenting the consolidated financial statements of the entities to consolidate the entity it controls. In other words, the standard requires a parent entity that controls one or more entities to present the consolidated financial statements. An investor is said to have control over an investee when it complies with the control principle. The control principle in this standard sets out three elements of control, which are number 1, power over the investee, number 2, exposure or rights to variable returns from involvement with the investee, and the last one is the ability to use power over the investee to affect the amount of those returns. FAR620 10 also illustrates that if two or more investors each have existing rights that give them unilateral ability to direct different relevant activities, the investor that has the current ability to direct the activities that most significantly affect the return of the investee has the power of the investee. According to FAR611 joint arrangement, a joint arrangement is an economic arrangement whereby two or more parties have joint control. The characteristics of a joint arrangement are when the parties are bound by a contractual arrangement and that the contractual arrangement gives two or more of those parties joint control of the arrangement. So, what is joint control? Joint control is the contractually agreed sharing of control over an arrangement that occurs only when decisions regarding the relevant activities require the unanimous consent of the parties sharing the control. The parties must assess the extent to which they should act collaboratively to direct the activities that significantly affect the returns of the joint arrangement, which means no single party controls the arrangement on its own, but a party to joint control can prevent the other parties from controlling the arrangement. Now, to answer the question, I would pass the presentation to Suraya.
Thank you, Fatihah. Okay, now that we know about the theories, let's answer the question. In this case, we can see evidence that Nel Berhad has significant control power over FNE Berhad as compared to Sinjis Berhad control over FNE Berhad. This can be proven when Nel Berhad appointed one senior management which has the right to make key decisions on important projects of the company and how it is financed. Nel Berhad also has supervisory roles in monitoring the project undertaken and obtaining approval from the boards of directors. This shows that FNE Berhad's returns are significantly influenced by Nel Berhad's performance. Since both Nel Berhad and Sinjis Berhad acquire 50% shares respectively, there is no majority voting decision. However, seeing how Nel Berhad controls the relevant activities in the project, Nel Berhad will act as the parent company to prepare the consolidated financial statement as according to FAR610 consolidated financial statement. Even though Nel Berhad and Sinjis Berhad acquire equal shares in FNE Berhad, it does not equal to joint control. As we had discussed, Nel Berhad holds greater control power because it has the right to make key decisions on the relevant activities. Moreover, there is no contractual agreement that requires Nel Berhad to consult Sinjis Berhad to make a collective decision. In this case, Sinjis Berhad participates in the project, but it does not have joint control with Nel Berhad. Since FAR611 joint arrangements requires a contractual arrangement to bind a joint arrangement with at least two parties with joint control, there is no joint arrangement between Nel Berhad and Sinjis Berhad over FNE Berhad. As the group accountant, it is advisable for Nel Berhad and Sinjis Berhad to draw a written contractual arrangement on their controlling interest in FNE Berhad as proof of joint control and joint arrangement. The joint control will prevent one single party from taking control of the arrangement on its own without getting the consent of other parties that shares the control. Next, I will pass to Dalili to discuss about question number 4.
Thank you, Suraya, for a clear explanation of question 2. Next, we move on to question 4. In this question, Plantain Berhad is a wholly owned subsidiary of ONO Berhad and has purchased 26,000 out of 104 ordinary shares in Sandi Berhad for 8.5 million ringgit. Plantain Berhad had the right to participate in the policy-making process and interchange of managerial personnel of Sandi Berhad. From this information, we are required to explain the relationship between Plantain Berhad and Sandi Berhad with reference to FAR620. In accordance with FAR620 investment in associates and joint ventures, an associate can be defined as an entity over which the investor has significant influence that is neither a subsidiary nor a joint venture. It is presumed that an investor has a significant influence over the investee if the investor holds either directly or indirectly 20% or more of the voting power of the investee. Furthermore, in accordance with FAR620, there is some evidence with regards to the existence of significant influence, which are representation on the board of directors, participation in policy making, material intercompany transactions, interchange on managerial personnel, and dependence on technical information. Based on the question, Plankton Berhad is a subsidiary of O&O Berhad. Hence, the group structure will be as shown on the slides. On 1 April 2021, Plankton Berhad purchased 26,000 out of 104 ordinary shares in Sandy Berhad, which is equivalent to 25% of shares owned in Sandy Berhad. In order to obtain 25%, 26,000 is divided by 104 ordinary shares and multiplied by 100%. This shows that Plankton Berhad has significant influence because it holds 25% control over the ordinary shares in Sandy Berhad. To further justify the evidence of the significant influence existence, as per FAR620, Plankton Berhad had the right to participate in the policy-making process and interchange of managerial personnel of Sandy Berhad. Therefore, since there is a significant influence, it indicates that Plankton Berhad's acquisitions of shares with 25% control makes Sandy Berhad a direct associate to Plankton Berhad and an indirect associate to O&O Berhad. Hence, the investment of an associate amounted to 8.5 million ringgit must be accounted for by using the equity method as required under FAR620. The cost of investment will further adjust to the share of profit of the associate, which results in carrying amount of investment in associate. The carrying amount of investment in associates is disclosed under non-current asset in the consolidated statement of financial position unless the investment is classified as held for sale. That's all from us, Group 4. Thank you.